Hello, my name is Kelly Howe, and I'm the Programs Coordinator for New York State PTA. I am so excited to have you join me. Please feel free to use the chat box to ask any questions during this workshop. I will try to answer in the chat as they are asked. We know that the lack of financial literacy can contribute to a lower standard of living in general for many Americans and can result in poor saving, poor spending, reduced job opportunities, excessive credit card use, mortgage default, bankruptcy filing, and poor investment decisions. Financial stress can impact relationships, physical and mental health, and can lead to criminal behavior. The past economic crisis and the increasing complexity of our financial system makes it clear that strengthening the financial knowledge and skills of our young people is critical to the future success and financial stability of our country. Just like reading and writing, financial education impacts the well-being of every student, as well as the economic and social fabric of our communities. There are so many different sources of information out there regarding this important topic. We combined several sources to develop an easy-to-use and understand workshop. The PTA is developing a financial literacy toolkit that will be available for units to use to provide a financial program for their students. In addition to a PowerPoint presentation that you will be able to use and revise to best support your students, we will be adding videos, worksheets, and links to other sources of information. I am going to be going through the slides and highlighting what you can cover in your workshop. There is so much information available that it may seem overwhelming for some, but we hope to provide a starting point for you and your families. The lack of financial literacy crosses all economic boundaries from low-income to high-income families. While perceived as a problem of the poor, even well-educated, high-income adults may not know how to properly budget or manage their money and investments well. The buying power of young adults is astronomical. With the increased availability of online shopping, gambling, electronic payments, aggressive credit card solicitation, and email and phishing scams, our children have become a captive audience and easy victims. Therefore, it is important to increase the financial knowledge and capability of all of our students. Students need to learn about earning and spending, saving and investing, making wise credit choices, paying for college, and recognizing and avoiding financial fraud. There are so many different topics in financial literacy and so much important information. The PowerPoint that will be provided will include information on the following topics. Please feel free to expand on any topics that you feel will benefit your students. Some units may provide a program for elementary age students, while others will be in middle school or high school, so needs may vary. Begin by asking students, what is a budget? Some may have an understanding depending on their age. You will explain that a budget is just a plan. It's not a restriction on spending. It's a plan for what you'll do with your money. It's a plan for what's coming in and what's going out. When you budget every month, you're giving your money a purpose. You're taking control. When you budget, you see what you make and what you spend. And if you find out you're spending more than you make, you can adjust so you stop overspending. You can make a change, you just have to know where to start. You can take control of your money, you just need a budget. In order to develop a budget, you need to know your income. Income is the amount of money you earn. It includes wages, salaries, tips, bonuses, vacation pay, severance pay, commissions, interest, and dividends. Annual income is the amount of income you earn in one fiscal year. Your annual income includes everything from your yearly salary to bonuses, commissions, overtime, and tips earned. Ask students how they earn their income. Do they have a part-time job, babysit, or do chores? Expenses are the cost of things you need or want. There are different types of expenses. Variable expenses are expenses that vary from month to month, such as electricity, gas, or groceries. Fixed expenses are expenses that remain the same from month to month, such as rent, cable, or a car payment. Irregular expenses are expenses that are not regular, such as a doctor bill or an auto repair bill. Personal expenses are expenses that are more of a want, such as clothing or dinner out with friends. Budgeting is a balancing act. You need to balance your needs with your wants. Pinpointing the difference between the two is a subjective proposition. One person may feel a purchase is a need, but another may feel it is a want. Does eating an expensive meal at a high-end restaurant qualify as a need? Or what about clothes? Do you have to stick with generic sneakers, or can you splurge on a pair of expensive sneakers? Ultimately, it's all about perspective and how you choose to manage your money. Wants and needs won't be the same for everyone. You may need a car to get to and from work each day, but the type of car you need can vary. The same is true for smaller ticket items, like that new coat you're eyeing. Outerwear is definitely essential to protect you from the elements, but if you have 3 other coats in your closet, that jacket is probably a want. Ask the students, what are some ways to decrease spending if expenses exceed income? And what are ways that you can increase your income? Collecting ideas is a good way to keep students engaged. Take some time to hear what they are thinking. It can be beneficial to ask yourself, is the purchase worth my time? If I make $10 per hour and the item I want is $50, is it worth 5 hours of my time? What else could I do with my time or money? Ask the students, how many of you have a savings and/or a checking account? Younger kids may have a savings, but older teens may have both. This will also depend on what options the bank or credit union offers. This slide will go into more detail of the differences between checking and savings accounts. Checking accounts are better for everyday transactions such as purchases, bill payments, and ATM withdrawals. They typically earn less interest or none. Savings accounts are better for storing money and earning interest, and because of that, you might have a monthly limit on what you can withdraw without paying a fee. Young people may not know how to write a check since they are not used as much as credit or debit cards, but it is important that they understand how to fill one out. As you can see in this example, the steps are pretty easy and straightforward. The steps will be described in detail in the PowerPoint that you will receive. Children should learn to set aside some of their money as savings from the time they start receiving an allowance in the elementary school years. Teens should be encouraged to save money regularly from all of the cash or income, including money from part-time jobs, allowances, and special occasions. Teens should learn to set aside a small percentage right off the top and put it into a savings account. This instills a savings habit early on. This savings will allow them to make bigger purchases later on. Set a long-term goal. What are you saving for? College? A new car? A down payment on your first house? This short video will give an overview on how interest works on savings accounts. Ask the students, what is the difference between credit and debit? I can remember when my daughter was 4 or 5 and she wanted me to buy her something. I told her I didn't have the money at that time and that she really didn't need it. She said, just use your card. Young children don't realize there is real money attached to it, whether it is taken directly out of the account or must be paid back later. It's good to explain when they are young in terms they will understand. Credit cards and debit cards typically look almost identical, with a 16-digit card number, expiration date, and personal identification number. But that's where the similarities end. Debit cards allow people to spend money by drawing on funds they have deposited at the bank. Credit cards allow consumers to borrow money from the card issuer up to a certain limit in order to purchase items or withdraw cash. More information will be provided in the full PowerPoint and in the toolkit. When you apply for a credit card, there are many terms you should understand before you decide what card is right for you. The following are just a few of the basic terms. It is important people understand how each can affect their financial well-being. Should teens have credit cards? Some people believe teens should use credit cards because they can help establish a credit history, so when the time comes, teens can qualify for car loans and mortgages, be able to rent an apartment, qualify for favorable interest rates on all types of loans, obtain lower auto and homeowners insurance premiums, qualify for a job. The best way to learn is often by doing. Having a credit card in high school can be beneficial if the teen is responsible, the teen is given a credit card with a low credit limit, parents monitor the teen's spending and payments monthly, parents discuss the choices made, and parents make suggestions for positive changes. Others believe getting a credit card for teenagers is a good way to teach them to be financially irresponsible. That's why teens are now the #1 target of credit card companies. Over 80% of graduating college seniors have credit card debt before they even have a job. The credit card marketers have done such a thorough job that a credit card is seen as a rite of passage into adulthood. American teens view themselves as adults if they have a credit card, a cell phone, and a driver's license. Sadly, none of these accomplishments are in any way associated with real adulthood. This decision should be made after a long discussion between the teen and parents. It's important youth realize credit cards have interest. Borrowing money is not free. Interest can add up if they only pay the minimum payment each month. In order to find out how much interest you are paying on your balance each day, you can convert your APR to a daily percentage rate. You will divide your APR by 365, the number of days in a year. At the end of each day, the credit card company will multiply your current balance by the daily rate to calculate the daily interest charge. That charge is then added to your balance the next day, a process called compounding. For example, if your credit card has an APR of 15%, it will have a daily rate of 0.41096%. Let's say a cardholder has a balance of $1,000 at 15% APR standard interest rate. The next day, interest is added and the balance becomes $1,000.41 plus any additional purchases and minus any new credits or payments. This process occurs each day until the end of the cardholder's monthly statement cycle. So at the end of the month, the beginning $1,000 becomes $1,013 when interest charges are applied at 15% APR. This short video will give an overview of smart credit card use. As mentioned before, your credit score is used to calculate your APR, credit limit, and loans. Your credit score is an indicator of how likely it is that you will pay back the money that has been loaned to you. Everything about credit cards affects your credit score, including the number of cards you have, the entirety of your payment history, and other factors associated with your debt history. If you use credit cards, you must use them carefully since your credit score impacts other areas of your life, such as getting a mortgage or a car loan. There are many types of loans, including personal loans, home loans, student loans, auto loans, and more. Each has a different purpose and have different terms and requirements. Every person who earns money working in the United States is supposed to pay federal income tax. You're also required to contribute to Social Security and FICA. Most state governments also charge a state income tax too. Since the government expects you to pay taxes, they take it directly out of your wages. As a result, the amount of money you take home will not be equal to the amount of money you earned. Your gross income is the amount of salary or wages your employer paid you before any tax was taken. So say you earn $300 for 20 hours of work, that is your gross income. But your net income, around $250, is what you take home after you have paid income tax, Social Security, and FICA. If your employer withheld money from your paycheck for taxes, and they probably did, you might be owed a refund, but you can't get your refund if you don't file a tax return. The information you enter on your tax return will be used to calculate whether your employer withheld too much, too little, or just enough from your paycheck to cover the taxes you owe. If too much was withheld, you will receive a refund. Here is a short video that discusses how to do your taxes. If you are working with teens, many of them may be planning on attending college but don't know where to start when it comes to finding money to pay for it. The first thing they should do is apply for financial aid using the free application for Federal Student Aid, or FAFSA. The website FAFSA.gov will walk them through the process. This form will give them access to federal, state, and school funding. Many colleges will use the information provided on the FAFSA when developing financial aid and scholarship packages. What is federal student aid? Federal student aid comes from the federal government, specifically the U.S. Department of Education. It's money that helps a student pay for education expenses. Federal student aid covers such expenses as tuition and fees, room and board, books and supplies, and transportation. Aid also can help pay for a computer or for dependent care. There are four main categories of federal student aid: grants, loans, scholarships, and work study. Grant monies usually don't have to be repaid. Most U.S. Department of Education grants are based on a student's financial need. Loan money must be repaid with interest. When students receive a student loan, they are borrowing money to attend a college or career school. Students must repay the loan as well as interest that accrues. It is important to understand the repayment options so they can successfully repay their loan. Many nonprofit and private organizations offer scholarships to help students pay for college or career school. This type of free money, which is sometimes based on academic merit, talent, or an area of study, can make a real difference in helping them manage their education expenses. The Federal Work-Study program allows students to earn money to pay for school by working part-time. The work is related to their course of study whenever possible. This short video will cover everything from the FAFSA to your EFC to how merit scholarships affect your financial aid package. A 529 savings plan is a type of investment account you can use for higher education savings. 529 plans are usually sponsored by states. Just about anybody can open a 529 account: parents, grandparents, other relatives, or friends, as long as he or she is a U.S. citizen or resident alien. As an account owner, you'll pick investments, assign a beneficiary, and determine how the money is used. If you are a New York State taxpayer, you can also benefit from state tax deductions. Your earnings grow federally, tax-deferred, qualified withdrawals are tax-free, and some states, like New York, have other tax benefits as well. The earlier you start, the more you will earn. Much more information can be found on the NewYorkSaves.org site. Insurance can help protect you from unexpected costs. Some common types of insurance include health, car, life, home, and renter's insurance. Health insurance can cover both expected and unexpected health care expenses, including routine visits, medication, emergency stays, and serious surgeries. Without insurance, these bills can add up quickly and cause a lot of debt for those who can't afford the out-of-pocket costs. Health insurance is a contract between a health insurer and a policyholder that requires the health insurer to pay for all or at least a portion of medical costs. Cost depends on many factors. Some employers may pay part of the monthly premium. Car insurance is intended to protect against physical damage or bodily injury that could result from driving, whether the incident is reckless or an accident. Driving while uninsured is against the law and dangerous because the driver and their vehicle aren't protected against an accident, collision, or general theft and vandalism. Policy premiums vary based on age and driving record. Life insurance is a policy that pays a beneficiary an agreed upon amount of money to cover the expenses left by the deceased. A beneficiary is the person or entity named in a policy who receives the benefits, such as a spouse. Cost depends on the policy, age, and health of the person it covers. Homeowners insurance covers the house you reside in and any associated structures such as a porch, garage, and balcony. Policy terms and coverage can vary, but your house would be covered in case of a major damage like a house fire. Price can vary from $500 to thousands per year depending on the age of the house, the value of the house, value of your contents, and your insurance claims history. Many young adults may rent before they purchase their first home. Renter's insurance is used by tenants to cover personal property in case of damage or theft, which is not the responsibility of the landlord. A policy is usually $10 to $20 per month. With all types of insurance, it is important to get quotes from different companies. Here is a list of 15 apps or websites that can help you save. Here is a list of the sources of information that were used in this workshop. Please feel free to use them and gather other information as needed. As you can see, there is a ton of information relating to financial literacy, and each one of these topics could have an hour workshop dedicated to them. We hope this workshop has given you a basis to begin the financial talk with your kids. Be sure to reach out to banks and credit unions in your area to see if they can give you information or handouts to use. Thank you. We do have some time left, so if anyone has any questions, please feel free to ask. Also, if you have an idea of something that you would like to add, please share. I am sure others would appreciate it or have similar questions.